This is problem 3.12 from Chapter 3, Brigham and Houston, Fundamentals of Financial Management, Concise 9th edition. And we're solving for components of a statement of cash flows. So the firm had $39,000 in cash at the end of year 2015, $11,000 in cash at the end of year 2016. Then we're told that they invested in property, plant, and equipment, and that cash flow from financing activities was $120,000. What was the cash flow from operating activities? Well, beginning cash plus cash flow from operating activities plus cash flow from investing activities plus cash flow from financing activities gives you ending cash. Alright, so if the firm started the year with $39,000, which was the balance at the end of the prior year, and they ended with $11,000, then the sum of these three will have to be a negative number. Alright, investing activities are purchase of property, plant, and equipment, or sale. It can actually be positive, but in this case, they bought $210,000. So that's $210,000 is a negative cash flow because they paid for it. And cash flow for financing was $120,000. Alright, so we need to solve for that number. Well, beginning cash plus CFO plus CFI plus CFF, cash flow from operating activities, investing activities, and financing activities equals ending cash. So I want to solve for CFO. I just rearrange terms. CFO, cash flow from operating activities, would be ending cash minus beginning cash minus CFI minus CFF. Okay, so just my God-given algebra talents, and then I'll just come in here to the spreadsheet and reproduce that. Take my ending cash minus my beginning cash minus my CFI minus my CFF tells me that I had $62,000 cash flow from operating activities. Part B says that accruals increased by $15,000, receivables and inventory increased by $50,000, and depreciation and amortization totaled $25,000. What was the firm's net income? Alright, so to do cash flow from operating, it always starts with net income plus depreciation. You add back the depreciation expense. Minus increase in assets, or increase in current assets, plus increase in current liabilities. Alright, so we're solving for net income, and we're told that depreciation expense was $25,000. Alright, so if inventories and receivables increased by $50,000, that means I spent $50,000 buying them. And if accruals increased by $15,000, means I borrowed them. So far the total, and all the total of that has to be equal to CF operating. So the total of this, if I add all the numbers together, I have to get $62,000. And net income plus 25,000 minus 50,000 plus 15,000 have to be equal to 62,000. Then the net income would be equal to the 62,000 minus 25,000 plus 50,000 minus 15,000. All right. So I go through my algebra. Alright, so before I add in the net income, those are a negative number, so this would have to be 63,000. Oops, got an extra zero. Oops, 74. Alright, I can do that iteratively. I can do it the hard way, or I could have just followed my numbers down here. 62,000 minus that, minus that, minus that. And I would have gotten the same answer, but it's $72,000 for part B either way.